Good morning, traders. Chris Bess here with Traders Profit Compass with another edition of Before the Bell for Friday, November 4th, 6:55 a.m. as I'm starting the video. And as always, please run that player at 1.5x. Quick look at futures. Oil off to the races, up 3%. Bitcoin up 2%. Equities more or less 0.8% across the board. Copper's up a whopping 5%. Nat gas is up 3%, so commodity complex is racing this morning. And then on the macro front, we've got the October jobs report at 8:30. I got a lot to do today. I want to blast through all our normal chart deck, but then take a quick look at energy and then run through the weekly charts as they are all going to finalize this afternoon at 4 p.m. So I want to give you a look at where the SPDR sectors are at on that. So buckle up. I'm going to try and pick up the pace so we don't run too long today. Dollar up sharply higher, broke back above our trend line. So now we've got resistance at 114, and of course we just saw support and our technical level and uptrend line that we can shoot against. TLT down, but not markedly so. So, I mean, despite Powell's commentary, rates did not zoom appreciably higher. Surprising move in the VIX. I mean, we were down 2%, starting higher and then down here close to 25. Kind of hard to explain, but it is what it is. We're at support, so watch 25 as your pivot on the VIX. Bitcoin's hanging in there, holding at 50, which is a good sign for liquidity, risk, appetite, etc. And if you're long Bitcoin, I'd stay long as it can hold the 50 right in here. I got that level. Let's just call it 20,000. It's actually 20,022, but right in there you can tell many days of support right here at 20,000. So I think that's a great little pivot level for you if you're trading that. Moving on to oil, I mentioned it was up 3%. That's going to put us up here, 91 area. Very important level. Why? You got the 200 EMA right there, and you've got overhead resistance. I've got a band here, but actually it's 9. I would just call it 94. You see a huge, well, even going back here, support, big level of support. And then that all flipped into resistance. You see resistance. So above the 200 at 91, then your next objective is 94. And then I would imagine if price were to break above 94, then you really got some running room, having, cleared all that resistance along that line. Oscillators made a move down as we suspected. Same thing on the McClellan. As we get into SPY, notice we dropped right down to that central pivot that we've had for a long time. Notice all the support back here at 370. That was resistance back in through here. And now we're at that central pivot area where on the daily chart, above would be generally bullish and below would be generally bearish. And you've got the levels that we, just went through on the upside, and now we're testing on the downside. One thing that is concerning from a technical standpoint, and I've got it penciled in here. Of course, on Wednesday, we had the big drop on Powell, and then yesterday was a consolidation day. Now, what this looks like to me is, a consolidation, flat bear flag with a projected move, taking the first leg down and then transposing it onto the second leg down for a measured move. Flags usually fly at half staff. So if this were to play out, and you got that break of 370, that would be your fresh sell signal. And then your measured move takes you all the way down to these lows. And like I say, it's always remarkable how these things line up. When you're up here, you're not thinking back at the lows, but when you put in the measured move, it comes down to fill this open gap and takes you right back down to where this key support level is at, let's call it 357. So that's not a promise. It's just a measured move projection. I think, as you work with your technical analysis principles, it's good to look ahead and hypothesize, just as long as you don't try to, make a big front run move and say, oh, that's going to break and we're going to fall. I'm going to make all this money on the short side. What you got to do is wait for the trigger, because 370 is the central pivot. It's the pivot on the daily chart. It's something we've been keying off of. So you get you get in your head, you got this big front run and it doesn't break support, and then, or goes the other way, then you got a losing trade on your hand. If you wait for the signal, then, if you get a break at 370, maybe it's on the jobs report that comes out at 8:30, and there's, some pre-market action and, blah, 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 whatever may happen. Then you get below 370, then you've got a very objective line to shoot against. Doesn't mean you're going to be right, but what it does mean is you've taken a very objective trade. You get short below 370 with a stop just above, and then you see if your measured move pans out and this gap eventually fills. So I think that's kind of an important look. Q's really took it on the chin yesterday, 2%, basically coming right back down to the level we talked about, filling this gap. I'm going to jump ahead to the hourly chart just to show you that yesterday was a consolidation day after this big thing, and you could certainly draw in that flag like I did on SPY, taking it from roughly 279 down, and then if you get a break of 280, I should have mentioned that. I misread that. That's why. Excuse me about that. It's 260. I was looking at that and read it as 280. Anyhow, you get a break at the bottom of the gap, then I can almost assure you a revalidation of this low down here at 255, and you can just see from the measured move target that it would go beyond that on as far as a measured move, and you can get that exact level by just taking your first leg and then transposing it onto the second leg, and then you'll get that measured move. Just eyeballing it, somewhere around 250. Actually, a little bit less, probably. Yeah, maybe 235, 240, something like that. IWM held in there pretty good yesterday. This 176, is the pivot for now. Our big pivot is 170, but you'll see right here we're holding in right in there with the 50 and the 20. And when we go to the 60-minute chart, we've beat to death this $12 wide trading range, and you can see that it undercut and then came right back, and now we're right at the top of this big $12 trading range, and we've got, you know, support levels all the way down basically in $3 increments. We've got 4 of them. You know, here's the first quadrant, second, third, and fourth, which would take us down to the bottom of the box. But you've got a great line right here to shoot against on 176, either on the, you know, bullish side. You know, we're up 1% here this morning. If that holds, and as long as 176 holds as support, remember all of this here is support. So if it can hold, then, you know, longs would be in good shape, certainly having an objective level to shoot against. And remember, you know, IWM has been outperforming the whole time. So if you're shooting to the upside, you know, if you see SPY and QQQ's green, I would expect outperformance from IWM. Meta, I'm just sticking with the daily chart here. You're down at 7-year monthly support, and right here at 90, and, you know, more or less from a super long-term perspective, if this area ends up holding, or, you know, there's an undercut and then a break back above, if you're a guy that wants to camp out long, this is a beautiful level, because you've got, you know, you're at 7-year monthly support, and if you get above that, then you got, you know, some really nice support below it. So might be a long-term or longer-term type swing situation if it can break back above 90 and hold. Apple, bad day at the office yesterday. Gapped down and well on its way to filling this gap here. Notice that yesterday, whereas the other, the indexes that we've looked at so far, you know, more or less consolidated yesterday, Apple continued its move. So we've got a fresh gap above, and now this is well on its way to closing this gap. Got to hold 138. I mean, these were the prior lows back here, you can see, and then you've got that spike low down here at 135. So I would use 138 as your pivot today. Kind of in a must-hold type situation, or we're going to go down and test this prior low again. All things considered, I think there was nice action in Tesla yesterday. Why? Because this 215 level held like a champ. You can see all the consolidation and price action right along that line, and that's what you want to see at a high volume overpriced bar. And at support, you want it to hold. It's supposed to hold. So now, whenever you see that, you know you got your line right, correct? Whenever you see a lot of traffic right along a line, either as resistance or over here support, you know you got the line nailed. and then it's all about trading around that line. And so now we're back at this 215 support. I think that's your pivot for today. Above, you've got a lot of resistance now. You not only have this resistance, but you've got this overhead resistance as well. So that 222 will be, I would expect a hard nut to crack on the upside. But if it does, then you go back to the top of this box and possibly even up to 235 to test these highs. And you've got the support levels below 207.50 and then 200 below. Just like Apple, bad day at the office for Microsoft, down about 3%, down here to 215. That's your pivot. I want to show you on the daily chart. We've got it here. I think, well, below 215 is going to be bearish and open up the next wave of selling, I would imagine, and bring it down into the 207.50, 205 range. So I think 215 is your pivot today, and then 220 will be your resistance. You got this prior low here that if it can take that out, then back up to 225, back up through the levels that we just fell through. Just going to show you, well, we can look at the daily chart, kind of just falling away in a dramatic fashion once this 102.50 was lost, just liquidating more or less. So let's go up here to the weekly. We are coming into support on this high volume over price bar right here at 87.50. So if it's going to hold, it's going to hold right here. If it does not, then I would imagine just a move down to the bottom of the box, down here in the about $10 lower at 77.50 type area. Google as well, just falling away. You can see on the weekly chart, we've got the pre-COVID high back here coming across right in that 77 area. Not a lot of support in between on the weekly chart. So if you're more or less a weekly position or swing trader, you're kind of here in no man's land. I think you got to wait for 77 to be tagged and held. Notice you've got a ton of support here at the pre-COVID high, and I think that would be your place for a longer-term swing if that level can hold. Netflix, we talked about losing 280, opening up the door to 270. Now we're right at the pivot of our original bracket. If it doesn't hold, you go to the bottom of the bracket at 262.5, and then we've got the big gap below that has yet to be filled. So notice that at this 270 pivot level, you've got that high volume over price bar, but once you break below, things fall away pretty quickly. So what you might want to do here, and it's just an idea, you're at a pivot, right? So let's just say there's a break below 270. So you take your short entry, and with a first target of 262.50, right? And then if for some reason the bottom of the bracket does not hold, then you're already short for the move into the gap. And a lot of times what happens is, price knows these levels. So what you'll often see is, say you get this move and you find support here, the market will not give you the opportunity to get that perfect entry into a gap. So it comes down here, it hesitates, and then overnight you get the move. And then you say, oh man, right? I wanted to get short on the gap entry, but it doesn't give you that chance, and it gap down 3 or 4 or 5% on that move. So what you might want to do is, take your short entry. If it gets down to 262.50, go to the bank, peel off that $8 or whatever that you made on that trade, and then stay short, right? Stay short and see if you don't get an overnight break into the gap. Just an idea, sharing some thoughts there with you. Semis, not a lot of action yesterday, down 1%, but you can see that 185 is your clear pivot, and as long as it stays below, the expectation is 179, 180 back here at this level. You can see resistance, support. I think 179, 180 down here is your target, as long as it stays below 185. And if things recover, then you got your long above 185, and you're looking for a move back up to the top of the box at 190. Not a lot to discuss on ARC. I think the most notable thing is, the relative outperformance. Down 0.6% yesterday, which is basically nothing. The pivots remain the same. ARCG, 1%. Here in the middle, you've got your upper pivot level there at 34.25 and support at 31.50. ARC K, again, outperformance, down only 0.5%. Needs to hold this 36 or we're going to 34. ARC W, down about 0.85%. Right here at the bottom of the box at 46. One of the things I like to kind of look for, and this will become apparent in some of the other charts that we look at going forward here, is when you're looking for, or when you're looking at charts, try to ask yourself, does this chart look different than all the others, right? That's your first clue to kind of dig in. This is a massive base, right? Going back to May, it really hasn't done anything. But keeping in mind that most of these ARC names have been down, 70, 75, 80, 85%. The meat may be off the bone here, and we're already at the pre-COVID levels. There may not be a whole lot more downside, and what this is doing is just carving out a long base. So yes, you can tactically trade it to the short side. as we've discussed, levels, if levels, for instance, on this chart, if 42 breaks, it's going lower. I mean, that's just the way it is. I mean, if the whole market goes down another 20% from here, which is possible, this will probably go down. But what you notice is that on bad down days for the Qs, the ARC complex in general is not going down as much. And I think most of the people that wanted to get out of ARC are out. And now it's the people, hanging on, and there's just not a lot of selling pressure. So make a long story short, yes, you can dive into the individual stocks, but what I'm saying is longer term, maybe a longer term type long than it is trying to be longer term short in a complex that's already down 80 or 85%. There may not be really anything left. Talking about charts that look different, when we look at refiners, we're in VLO, big trading range. We broke above, and now we're holding it with a good day yesterday, up 3%, and now we're up again this morning. I'm still looking for 142. And as long as this 123, 122 and a half holds, I'm going to stick with it. Here's another refining chart, Dino. As you're flipping through charts, it's different, right? It's in a nice uptrend. You've got an ascending triangle here. It broke out. It's holding and racing up to wherever that next level will be. So I think refiners, here's another one. Marathon, cup and handle, breakout, took out the prior high, riding the 8-day up. You got the 20 coming up. I think as long as it holds 112.50, anybody that's long MPC should stay long. I think refiners are going to be going higher. XOM, again, looks totally different than most of the other charts out there. Consolidation, breakout, took out the prior high. Up again this morning, up in the mid 113s. I'm looking for higher. You got the 8-day, riding the 8-day up, and as you can trail a stop if you got in down here at 100. We've already, a lot of us have already rolled up a couple of times since then, and I think you can continue to kind of use that strategy of when you build up some equity or get deeper into the money, you can roll up, buy more time, and stay long the energy complex. Now, what I want to do is quickly go through the SPDR sectors. These are the weekly charts that we'll finalize today at 4 o'clock, but I want to show you where we're at. Materials. We've got a firmly established downtrend line. We've had a kickback rally up to that line and have been rejected there. This is a little bit of a tricky one on the long side for the simple fact that you've got downtrend resistance, and then right above you've got resistance at 76, where you've got all this trading range. So I think you'd have to make a decision. If you got this little breakout here, do you really want to take that with really only $1 worth of upside there? And you've got a big support zone down below. I don't know, it looks like it might be a hard trade, but copper's up 5% this morning. The commodity complex is up really across the board. You may see that breakout, but what you may want to do is simply alarm 76 for an upside break into the old trading range, and then your target, you really got some running room there between 76 and 87, so that would be a nice long. I would certainly alarm that. On the downside, sure, you can take a break below 72 and see if you come down to revalidate this low down here. That's totally up to you. You wouldn't expect to see communications doing very well. Facebook and Google are 44% of this ETF. You can see we already lost the pre-COVID high, and the door has been opened to the COVID lows, which was all the way down here at 37.50. So that door has been opened. Now, if you get a reclaim of 47.5, you might have something cooking to the upside, but this has got a lot of work to do, and doesn't look particularly all that hot. In fact, if you pick off this level 47.5 and then take it over to the daily chart and you get a kickback rally, that would be that classic breakdown, back test, and then leg down type of scenario that we've talked about many times. As we move on to energy, again, looks totally different than 95% of the charts out there. Super well-defined uptrend. We actually just broke out. Took out these prior highs. So if you wanted to, have a conservative play on energy, this ETF is like 45% ExxonMobil and Chevron. So you can take that long right here and see if we get the next leg higher. And remember, we just talked about oil trading at 91. Back here at this high, oil was 125. So just to put it in perspective, the stocks are far outperforming the commodity. So if that continues to hold true and oil starts to run, no telling where this could go, right? I mean, if this was oil at 125 and this is oil at 90, where's this going to go if oil, starts shooting above 95, 100, 125? Not saying that's going to happen. All I'm saying is massive outperformance in the stocks versus the commodity. XLF at a critical point here, right at 34, you've got the high volume over price bar, and you got the downtrend line at right coming in together at 34. That's a big pivot for financials that you can, if you can take 70 cents worth of risk, right, and you wanted to try a short, if you were bearishly inclined, notice also we got the 40-week moving average moving in right there as well. So you can use those as your pivots. And, if you wanted to take a short, it's a short against 34, it would definitely be objective. You do have some support coming in right here at 32.50. One thing I wanted to point out also is you got the makings of a double bottom with the W. Here's the left side, here's the middle, double bottom. You get that breakout here, and then you break back into the old trading range at 35.50, 36, then that would complete that double bottom W look. So a lot of moving pieces there on financials. XLI has made some progress, and you can tell this week has really held its own while some other sectors have been falling apart. Broke back above the 40-week moving average here in green, and now you've got a resistance level with the downtrend line in the old trading range at 97.5. If you were looking for a bullish move and you had that alarmed, I would certainly take 97.5 long and see if you can get a $5 move up to 102.50, 103. You wouldn't expect XLK to be doing anything. It's been, hammered this week, down 8%. Kickback rally right to the trend line where it got rejected. You've got a high volume over price support here, right at 120. I kind of expect tech to remain under pressure, although some of those names like Apple and that are falling to support. It's got to hold this area. I mean, if it doesn't, your pre-COVID high is way down here at 100. You do have some intermediate support in here at 107, 107.50, but in my mind, it's really gotta hold this 120 area. XLP defensive names, you got a nice pivot right here at 72.5. You do have a downtrend line that I haven't marked in, but holding its own right in this area. I think you've got a nice pivot there at 72.50. Utilities still kind of under pressure after this big drop off. I would use 69 as your pivot. You can see the 40-week moving average right there in green coming in right at that technical level. Watch it carefully. I think right here in no man's land, kind of hard to take. This may come up for a breakdown and a back test and either break out or break back down, especially if rates take off. That's going to be a negative for utilities, right? You can get safe money at 4.25% versus yield at 3% with the stock risk. So I think people that are yield hunting will opt for treasuries if those yields start to take off again. Healthcare has been remarkably resilient. Again, this chart doesn't look anything like the other charts. Very narrow trading range. Fake breakout, bottom of the box, fake breakdown, top of the box, bottom of the box, top of the box. Now we're at the top. I would certainly have 135 alarmed for a breakout no matter when it happens. It could happen a long time from now. But if you wanted to actively trade that, you are at the top of the range, certainly objective to see if it goes down to the bottom of the range. And I'd have 120, if you didn't want to try to trade or game this $12 range, you simply alarm the boundaries, right? 135 and 122.50. You get either one of those to fire, you follow price either out of the box to the downside or out of the box to the upside. And last chart for you, XLY, 25% Amazon, and if Amazon isn't doing great, it's hard for XLY to do great. We're right here at a critical level. You notice we spent more or less a month and a half right here at 136, and now we're right back at 136, and we've got the pre-COVID high at 130. So I mean, we're right there. Does this turn into a double bottom? Here's the W, down leg, kickback rally, rejection, back down to support. There's your double bottom. Notice we do have some bullish divergence here. We're back at the lows, but momentum is higher and RSI is higher. If you wanted to take, see how it goes till the end of the day, you've got an objective long here. And if you were a super long-term buyer and you can handle $6 of risk to the pre-COVID high, if you're buying common or whatever you might be doing, that's your ultimate support right there at 130. And what you may want to do is just kind of play it by ear. And if you got that move to 130, you got to be a buyer there because you've got all that support below. And maybe that would correspond with Amazon going to the bottom of its box, and then that would be it for the down move. So longer video. I hope you like the additional content with the SPDR sectors. Fridays are always important. Watch those last 2 hours of trading to see what risk sentiment feels like going into the weekend. And we'll have to see what the jobs report does for things at 8:30. So let's wrap it up there. This has been Chris Buss with Traders Profit Compass. Have a good day of trading and talk to you next time.